Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. If you like making money, subscribe to the channel. I'd love to have you in our community and ride this commodity bull market up together. I usually talk about commodities just because they're the cheapest asset that I know of, and everything else, it's not nearly as cheap. Today, I'm going to go over some ratios. Ratios tell us relative value, tells us where we should be looking for investment opportunities. It also tells us what trends are happening asset versus asset. So they tell us a bunch of information about the market. So let's jump in and look at ratios. This is a ratio update. Again, it tells us value in relationship to assets, tells us direction and outperformance of the trend, and we're looking for breakouts of chart patterns just like any other chart. So here is a very big picture view of the Dow to gold ratio. And as you can see, we've got this pattern that it's creating that's a massive pattern. And here we are right here. I think this is going to eventually head downward. I think gold is going to outperform the Dow at some point, and I think it's going to happen very soon. I think what we're putting in is something similar to this kind of action there. We came up, coming back down, and we're going to come back down like that. That's my guess. Here is it zoomed in on that tip. We're at 19. I think this uptrend line will be broken at some point very soon, and it's going to head on back down. But at the moment, the Dow is outperforming gold at the moment. Here's the gold to silver ratio. You can tell we've got an uptrend line with all these bunch of different hits coming through here. And we are right there ready for silver to break its uptrend line. It's a big uptrend line to the downside, meaning that silver is going to outperform gold and that we're going to enter a bull market in precious metals and commodities. That's what it means. So that's one to watch. This is zoomed in on it. You can see we're at 68.05. We've had this nice downtrend here. What I think is going to happen is probably on a short term, gold will outperform silver for a little bit, and then silver will come raging back, shooting this ratio downward quite substantially. So silver typically lags gold, so gold will be the first mover, silver will follow, and it will go at a much faster rate, just delayed behind it. Here's a parallel universe. This is looking at the copper to gold ratio and US yield on the 10-year. You can see these things are very much linked. 10-year is a little bit before or after, depending on what moves first, but they're linked over time. And what I think is going to happen is that the copper to gold ratio will go up. Remember, copper's first, so this will go up with government yields going up eventually. Here is the copper to gold ratio. Remember, this is gold first. So when copper outperforms, this ratio goes down. We are doing that, and it looks like we broke this trend line right here. We're coming and going to break this trend line. Up here means that copper is cheap. At the bottom means that gold is cheap, that we're at the end of a commodity bull market. Here was the end of the bull market over here. You can tell that using the ratio, and you can also use a bunch of other ratios to see that and compare all these ratios together. But at the moment, we are in an outperformance of copper in relationship to gold, signaling that the economy is recovering, signaling that we're in a commodity bull market. Here's it zoomed in. You can obviously see this thing's in a nice, strong downtrend with copper outperforming gold. We are still at a 418. 418 puts us way up here. We are still very cheap. We are not on the expensive side. So it's got a long ways to move. And remember, gold is a moving target. It's not stationary. If gold moves up, copper is going to have to move up that much more. Here's the gold to oil ratio, just a very long-term look at it. Here's 30 highlighted. Anything above 30 is dirt cheap for gold, for oil. we went off the scale over here, and oil was sold so far off that I think it's going to create supply problems in the future. We're going to see bankruptcies and stuff like that, which we saw, and we're going to have supply problems. That's going to manifest itself in a lower oil to gold ratio. I think it's going to go below 10. So looking at the current ratio, we broke out of this pattern up here, if you know ratios, and we're coming on down. Oil is outperforming gold, and we're still at a 27.8. That is still extremely cheap in relationship to history. So oil, I think, is still something to hold on to until that ratio becomes expensive. And keep in mind, gold will go up during this bull market. Oil's just going to go up faster, and it's going to compress against it. That's where all those gains are going to come from. So I do think oil is a great opportunity for investment. Platinum to gold ratio. I know you guys like some platinum on the channel. I like it very much. Anything above 2, platinum. Platinum is expensive above 2. Platinum is cheap below 1. We are far below 1. In fact, we are at currently 0.68. That is incredibly cheap. It was below a half. This is an anomaly in history. We are still in anomaly land. We are right down here. It hasn't been this cheap in many, 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 many years, maybe never. We are carving out an anomaly. So platinum was a good spot to put some money into and hide out in my opinion. Again, that's not financial advice. It's just a financial education channel. That's where I think. PE to gold ratio. Look at this thing. We've got a nice big downtrend, broke the downtrend, and now we're moving on up above this trend line from 2016. It's looking fantastic for potential investment. So the gold mining stocks, silver mining stocks, all of those stocks, and royalty companies. I love me some royalty companies. They all look great. The ratio says that it's going to do an outperformance against gold. That's the time you buy them. It's when it outperforms gold. And if gold's outperforming the Dow, if gold's outperforming all these other ones, that's when you own them. So on a ratio basis, I don't see any problems. It looks like a commodity bull market's coming. I don't see any shifts in any of these ratios. They're all still relatively cheap against gold, and they all look great for potential investment. That's what I see. I do think gold's going to go up here at some point. I think gold's going to outperform the Dow, and I think all these commodities will continue their outperformance against gold, pushing the entire complex higher, 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 and higher. That's what I think. This stuff isn't super fast moving. It takes time. So my strategy has been to buy my investments and sit in them. That's how you make money. You just sit. Don't do anything. If you guys like this content, give me a thumbs up. If you guys have any questions, leave it below. And thank you for listening. This is Finding Value.